Products can help. With a full product line for the entire life cycle of your crop, Nexta Solutions help you stress less and yield more. Ask your Pioneer sales representative about Nexta Biologicals or visit pioneer.com/Nexta to learn more today.
When the game is on the line, championship teams know the game plan. They communicate and work together to win. We all need a game plan to protect ourselves online. Talk to family and friends so they know how to stay safe too. Create strong passwords. Turn on multi-factor authentication. Update software. And recognize and report phishing. Because online safety is not something you want to fumble. Get more game-winning tips at CISA.gov/secure-our-world. Then share them with family and friends.
Let's go to the markets page at ProFarmer.com and check today's closes. For March, HRW wheat futures were 3/4 of 1 cent higher at 5.21 1/2. March soft red wheat down 2 cents to 5.10 1/2. March corn futures 1/2 cent lower at 4.44. July corn futures closed at 4.57, down 1 1/4 cents. March soybean futures 5 3/4 lower today at 10.42. July beans closed at 10.80 1/4. That's down 6 1/2 cents on the day. March cotton today 41 points higher, 65.06. See your livestock. February fed cattle today 75 cents higher, 236.62 1/2. March feeders up $3.45, 359.02 1/2. And February lean hog futures down 47 1/2 cents to 85.67 1/2. Get more, visit tryprofarmer.com.
You know what hope is? Hope is action. Carving a path forward, even when it's hard.
And kids still know how to dream. They're the best pathfinders of all.
Child Fund. Hope means helping millions of children living in poverty worldwide to grow up healthy, educated, skilled, and so all those good things can come true for them, safe.
And that means safe at home, safe at school, and safe online.
Hope means walking this path together, all of us. Because when we work together, we can do so much more.
That's right. Hope includes you.
Child Fund, because we need each other.
To learn how Child Fund works with children in 23 countries to help them achieve their full potential, visit childfund.org. That's childfund.org.
Miles, you're late. Again. Where have you been? No sense of responsibility.
This is Kevin Love. I'm partnered with The Spider Within, a Spider-Verse story to let you know that everyone's going through something, even superheroes.
Oh man, I'm bugging.
You're not reaching your full potential.
Unacceptable, Miles.
Let's take the stigma out of asking for help.
Hey Dad, you got a minute?
Yeah, what's up, son?
Can we get some air?
Of course we can, yeah. Grab your jacket.
I just got so much on my mind, you know?
I hear that, yeah. So tell me what's going on.
It's just like homework, girls, well, one girl.
If you need support, visit kevinlovefund.org to learn more.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory.
We are in the middle of a conversation with Rick Brock from the Brock Report. We were talking about that acreage mix and how Monday's reports could have an impact on things going forward. So if corn acres hold up, beans find it difficult to pull up from what we saw in 2025. And then throw in on top of that, Rick, a recovery, and I'm not saying a massive recovery in export demand, just get us back into the 1.6, 1.65 range on bean exports. Got to keep a little bit of crush capacity expansion in there. It feels like it's getting easier to tell a price-friendly story on beans, too. Yes? Oh, I think you're on. Oh, there he is. There he is. We got you.
Yeah, I think it's going to be a real struggle in the soybean complex because to get exports even this year above 1.635, I think is going to be very challenging. I think it's going to be closer to 1.585 to 1.6. These purchases this week from China are obviously a big help, but that's already factored in at this number, and it's just going to be a real challenge. What we really need in the soybean complex, and it's something producers don't want to hear, is we need a cut in acres. Right now, this past year we planted 81.1. If I factor in 80.5 million acres, I still come up with a carryover next year of about 231 million bushels, which doesn't justify beans up much above 11.50. We really need beans higher than that for people to break even, or at least above $11, and that's going to be a real challenge. But let's just hope, and this is certainly not anything that we can confirm, that China steps up and buys more than the 12 million metric tons. Right now, there is some dry weather in Argentina and pockets of dry weather in Brazil. So there's still possibility of some production issues in South America. And so, but the real issue here is I think everything is bullish or bearish from a certain price level. A month ago, March beans were trading at 11.50. Now we're at 10.50. This market's already discounted a lot of bad news. And also point out for those that are listening, that are technical traders, in this sharp sell-off we've had in the last month and a half, open interest has dropped like a rock, which means all of the declines were caused by long speculators getting out of their positions. And that, to me, is just an absolute washout. So, as we take a look, relevant to what the report says on Monday, I think we should get a bounce back up into at least $11 to $11.20 in the March contract. That we closed today at 10.56. So, it's not going to take much in a market that's oversold speeds to get a pretty significant bounce, is my point.
Okay. All right. Let's talk bigger pictures. Take a step back and look at the entire forest here. And when you and I have a conversation about that, we're talking about land values. We got the bridge payments coming. There's expectations of a big PLC or ARC payment in October on 25 crop. And with all of that is going on, it seems like land prices are holding up better than what corn and soybean prices should allow.
Land auctions in the last 6 weeks have not shown any selling pressure at all, particularly in Iowa and Illinois. There still is more demand than there is supply. And it gets back to a function of not what the land will make, but who has the money and what do they want to do with it. One thing we don't talk about a lot in agriculture is the massive amounts of wealth that have been created in the stock market, and it just keeps going up again today. There's just been enormous wealth created in the last 3 or 4 years in the stock market, and we're also going through generational changes in a lot of businesses right now, and a lot of people are inheriting money and they don't know where to put it. And so, it's hard to be bearish, I think, the land market. It has really little to do with the income level. And then you take a look at areas like, let's say, northwest Iowa, where you have a lot of livestock. And thus you have a lot of farmers with a lot of money right now, a lot of cash. And that cash is going to pour into the farmland. So, I think it would be very dangerous to be bearish farmland values, and yet I think most realtors will tell you right now that the cap rate on most farmland in the Midwest is about 2.5%, i.e. that's the expected return you should expect if you go in and pay cash for the farm. Could be a little less, a little more in certain areas. You would say, what's the incentive to buy it? To diversify portfolios. Or in the case of farmers, it's the land right next door, and if I have an opportunity to buy it, I'm going to buy it.
Yeah. Rick, I don't disagree with anything that you guys, in fact, I agree with everything that you just said there, but at the same time, I look at the input side of the market, and there needs to be a reset in these grain markets from fertilizer to seed, equipment, and land might be, you know, the rents that are being paid might be one of the biggest resets that's needed, isn't it?
Well, theoretically that is true, but in reality it's not going to happen. And there will be certain pockets where you'll see a reset in cash rents. But when you look at a state like Iowa, the estimates are 84-85% of the land is owned debt-free. You know, it's hard to break an asset value when there isn't a lot of debt. Where we are going to see some issues, and this is throughout a lot of areas in the Midwest, that there were a lot of young producers who did a poor job of marketing in the last 3 years. They were paying too high cash rents, and unfortunately some of those are going to see some career adjustments and career changes. We're going to see some of that. I don't think this is as bad as 1986, but it's going to be the worst year we've seen since 1986 when it comes to career changes of some young people. And it's going to be worse in the South. Areas of Mississippi, Arkansas, where cotton prices and rice prices have been hit really hard, they're going to see even more adjustments. And we will see in areas like that adjustments in rents. But you know, one thing, and most of your listeners are from the Midwest, when you get to the southern states, there's almost very little cash rents done. Everything is basically on a share crop, where the farmer's getting 2/3 of the gross and the landlord's getting 1/3 of the gross. And that's pretty common when you get into those states. So it's not going to be as big of adjustments. And then you take a look at the bridge assistance program. The rice farmer is going to get $132.89 an acre. The cotton farmer is going to get $117.35 an acre. That's quite a difference between a corn farmer getting $44.36 and a soybean producer receiving $30.88. So there's going to be some cushion there to help some of those people. But nevertheless, I think we're going to see a very, very large expansion of farm size even this spring. I think there's going to be some big changes taking place.
Okay, interesting. Let's talk in the final 3 minutes here. A lot of people declared that live cattle market as dead, basically from the middle of October until the end of November, and that may have been a premature declaration right there, Rick.
Well, I think it's possible. You know, the livestock market is always so much different than the grains. In grains, the market is voting what the value is of the amount of corn and soybeans going to be left over. There's never any such thing as the amount of cattle and pork left over. We're going to consume whatever is